Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 22nd, 2021. Let's talk about Asana. Asana is one of my favorite software companies. It's under the legendary leader Dustin, who was co-founder of Facebook. So with that, let's jump in and look at Asana. We'll look at company overview, look at the competitive landscape, we'll review a few charts, look at the financial summary and stock performance, and also rank Asana, Monday.com, Confluent, Team, Smartsheet, Blackline, Bill.com, and AppLovin. So finally, we'll do a final verdict. So with that, let's jump in here. As you look through competitive landscape here, we got various companies which may not be direct competitors, but in the same space. We got AppLovin, again a cloud-based software company here to help the mobile app developers. We got Asana. They want to remove all the uh, non non-value work away from you. And we got Bill.com here. They have a cloud-based software that simplifies, digitizes back office financial operations. You got Blackline, which also does similar things here. They streamline your accounting and financial operations. And we got Confluent here. Many of you know Confluent. It's a cloud native platform here. Helps you with your real-time streams and helps the workers to work better. And we got Monday.com. Similar theme here. Cloud-based visual work operating system helps you to do your best work. And we've got Smartsheet here. Many of you might have used Smartsheet at one time or the other. It again enables the team to organize, plan, and manage. And we got Atlassian or Team. It's a great company. Many of you might be knowing their products here. They got a favorite product called Jira, workflow management software, and they got many other products. So with that, all these are great companies. We'll dive into these companies and see what is the best company here, and also deep dive into Asana. So with that, as you look through here, from a quick stock chart perspective, keep watching here. We got a black line, $104 company here. Nice sales growth and nice gross margin. It's done great in 5 year sales growth, 1 year sales growth, quarter over quarter. Very steady Eddie company. Right now, stock is pulled back from 30 to 52 week high nicely. It's a great buying opportunity for black line. And look, we got price to sales ratio 15, not very expensive. They got a little bit high debt to equity ratio here. Tells you they got a little more debt on the balance sheet. And then got AppLovin, relatively new young company here. As you can see here, this is nice sales, $2.5 billion in sales, and it's 21% down from 52-week high. And you got the company that we'll deep dive into, Asana, one of my favorite companies here. Stock price is around $79. And look, nice sales growth in 1 year, quarter over quarter, and also nice gross margin. It's a software gross margin, as you can see here. One of the best or the best in this, collection of stocks here. And it's got a manageable debt to equity ratio, not too much debt, which is completely manageable here. They're paying down the debt as we speak. And as you look through here, stock has been struggling in 1 month and 3 month, down 45%. Great buying opportunity to buy some Asana. Then you got Monday.com here. This is also a new company. As you can see here, it has done 34% in 6 months, and it does not have debt, too much debt at all. That's also a good company here. Nice gross margin, 87%. Then you got Confluent, again one of my favorite companies here. $68 stock here. Nice software gross margin, 67%. Not too much debt at all, and a little bit high price to sales ratio for all these names: Asana, Monday.com, Confluent, as you can see here. And then we got Bill.com, one of my favorite again, and nice sales growth when it comes to 1 year, quarter over quarter, great gross margin here. And keep watching, a little bit pricey from a price to sales perspective. Stock has been dropped off in last 1 month and 3 month here, and it's done great for 1 year. And then we got your Smartsheet. Smartsheet again, $77 stock, great sales growth and gross margin, 79%. That's a good gross margin here. Stock has been struggling a little bit, as you can see here, down 9% from 52 week high. And last but not least, Team or Atlassian, a great company, Australia-based company, $380 stock price here. Look, great sales here, 5 year, 1 year, quarter over quarter. It's very steady Eddie company. It's one of those very good company. It's been doing this for a long time and a very proven company here. And PS ratio is 43. All these are software companies, as you can see here. They got high valuation, and as you can see here, it's done great in last 5 years. Very good, 1447% performance. That's a great number here. As you watch here, many of these companies have got great cash cushion here. Look, bill.com, $1.1 billion cash. They also have a lot of debt, as you can see here. And as you can see here, Confluent also has a lot of cash, very low debt. And we got bill.com, a lot of cash and some debt. And finally, team.com, Atlassian also has a lot of debt, as well as cash. So with that, let's dive into these companies into a little more detail and see what we can, how to grade these companies and rank them. And as you look through here from a chart perspective, you got Asana. Asana was a high flyer stock back in 2020. This year, they're coming down nicely. As you can see, a nice pullback. Looks like it's overdone. Right now, they're trying to go higher. Look, on the balance, volume is also going higher. That tells you this is really worth looking at this level and putting it on your shopping list. And you could even buy a little bit at this level here. And we got Monday.com, same theme here, done great, but this year it's pulling back pretty hard here. But look, on the balance, volume is going higher. This is also a good buy to slowly buy some. And then you got Confluent here. Confluent is again a great company. Stock has pulled back pretty hard here. Now it's trying to go higher. I would like to buy some Confluent myself. It's a great stock here. And you got Team here. Team is a very, very stable company. It's got a proven record. A lot of software developers love this company. Look, your stock is going to go higher. Any pullback you see, go ahead and buy some Team. It's a great stock and company. So with that, we got a few more here. Smart Sheet, probably it's a little high here, a little high RSI here. I would wait for a pullback in Smart Sheet. Bill.com, on the other hand, very steady at the stock. I'd been buying and trading this for a long time. It's a great back office accounting type software. Look, on the balance, volume is rising. Stock has been fallen off here. Great buy at these levels. And then got Bill.com, again one of my favorite here. This stock is also helping you with your accounting and back office operations here. Stock has fallen off here, trying to go higher. It's also a great buy here. And then you got AppLovin. Again, it's a great company. Stock is down as just like other stocks here. Now trying to go higher. Good time to buy. Look, on the balance, volume is going higher. That's a good sign here. So with that, as you look through here, Asana, from a background perspective, a lot of you spend too much work on the busy work at your workplace. Most of the time, most people spend only 40% on the strategic work and 60% about unnecessary meetings, email and messaging, some duplicated work, and maybe some status reports and phone calls and communicating and collaborating. That's where this company comes into play. They want to take away your 60% of mundane job here and help you focus on the strategic work. That's a very good vision to have. And they want to really spend optimize your time spent. Most people spend 33% of time on the emails, and they spend a lot of time on these meetings, and they also spend a lot of time in some mundane job. So they want to cut down. They want to make sure you spend less time on the emails and more time on the business executions, and through those things your employee satisfaction will go higher. This company is rated high from an IDC perspective. They got a lot of accolade here. So with that, that's the value prop here. don't They don't want to spend time on the mundane job. Instead, spend time on the strategic job. So with that, as you look through here, they have a lot of paying customers, and they're growing their customer base here. As you can look through here, total number of paying customers is going at a nice clip here. That's a great sign. And they also have 5K plus customers paying $5,000 plus. That's also increasing nicely. and customers paying $50,000 and plus. That's also increasing nicely. That tells you, customer base is improving. That's a key for these software subscription type companies. And let's look at the detail a little bit. As you look through here, this company is a work management platform for individuals, team leads, and execs. Basically cut down on your context work and focus on the core work. Stock price is around $79. Market cap is $14.9 billion. Look, stock has been fallen off the cliff here, trying to go higher here. It's a great buy at these levels. And from an analyst recommendation perspective, right now it's a moderate buy with 7 analysts saying, buy Asana here. And as you look through here, it's named as a leader in the enterprise grid here. And, the president and CEO, Dustin, he's buying a lot of shares himself. He understands it's a beaten down at this time. He knows the value and he's buying a lot of stocks here. And as you look through here, overall, I think there is some good rap here. It's a good company. Hedge funds are also buying Asana here. They know this stock can go higher. So with that, from a leadership perspective, we got Dustin here. Looks like a pretty personable person here, down to earth type guy by looking through the picture here. And we got people leader and the finance leader here. Look, he's got 100% approval rating here. That's a great approval rating for Dustin from Glassdoor.com. It tells you employees love working with the leader, and he's really down to earth, connects nicely with the employees. And as you look through here, he's the CEO and co-founder of Asana. And before doing that, he was co-founder of Facebook here. He was the first chief technology officer. A lot of relevant background, in software and helping lead companies like Facebook. I think overall his background checks out. Looks like a down-to-earth leader, connects nicely with the employees. That's why 100% approval rating here. As you look through deep dive perspective, as you look, stock price is around 79, and nice trading volume. And trading volume is 1.5 times higher than the normal 3-month volume. That tells you even though stock is going higher, there are more people buying the share. That's why relative volume is going higher. And look, target price is $100. Even though current price is 79, there's a nice target price here, and it's down about 45%. And as you look through here from a sales perspective, $335 million in sales, nice gross margin. It's even going higher in the recent quarter. And as you look through, company not making money yet, and RSI is low here, and money flow index is also low. That tells you can buy the stock on this pullback here. From an earnings per share perspective, this year it's negative, but next year it's a positive 1%, and sales growth for next year is positive. That's a very good sales growth for next year. That tells you analysts are bullish about this company. And as you look through here from a total debt to equity perspective, they got $343 million in cash, and they also have $255 million in debt. Debt to equity is 1, which is a little high, but I'm okay. I will go along with it given it's a growth company. Free cash flow is negative right now. And as you can look through here, right now company not making money. That's why ROE and ROA are negative here. And finally, from a return perspective, stock is down in 3 months, and 1 month, as you can see here. But as you look through here from a 20-day moving average, it's higher than 20-day moving average. Right now, it's below 50 and 200-day moving average. As it takes on 20-day moving average, it can still go higher. It's a bullish crossover at this time. And a lot of insiders still own this company. 10% insider own. That's a good sign here. And insiders are buying this company. CEO himself is buying a lot of shares. He knows the value here. Institutions own a lot of shares here, and institutions also buying the share a little bit. That tells you company doing the right thing here and leading in this space. And from a monthly price change perspective, as you look through here, this is the most recent here. This is December, which is current month. Current month, the price is down by 21% in the last 21 days or so. And in November also stock price is down. And stock has been doing great in, in earlier in 2021, and also in 2020 I think it's done okay. So overall what's going on is, look, stock has gone higher, it came down, now it's improving. From this point onwards I see a turnaround here, with CEO buying a lot of their own shares here, and stock prices gradually improving between November and December. Now I see a positive trajectory. That's why it's a good buy here. And from Asana by numbers, their annual earnings per share is down at this time. It's for a reason. They want to invest in their own platform versus showing the earnings to Wall Street. And look at the annual sales. I love this clip here. Nice annual sales growth here, year over year. That's a good number. And shares outstanding is pretty constant. They're not diluting their share count. That's also good. Quarterly revenue growth is very respectable. I like this. That's why give a check mark here. And we got quarterly R&D investment is good. The company spends money on R&D. That's always a good sign for these growing companies. From a net income perspective, they're not there yet. They're not making money end of the day, which is okay for these type of early growth companies. No issue at all here. And they have some debt, as you can see here. The orange bar is debt, and we got 2020 all the way to 2021. Look what's going on here. The debt is going down. It was 613 back in March, April here. It came down to 250 in June or July, and now it's 255. So they're reducing their debt, and they're increasing their or keeping their cash pile almost same levels. That's a good sign here. I love companies reducing their debt levels. It's always a great sign. And from a gross margin perspective, look, healthy gross margin. I love companies increasing their gross margin. This company doing it. Look, they've increased their gross margin nicely. They have 90%, 90.97, almost 91% gross margin. I love the clip here. Debt going down, as you can see here, and the gross margin going higher. That's a good sign. And as you look through from a earnings history perspective, this company is very predictable. Wall Street loves predictable revenue beats here. They beat on the earnings per share last 4 or 5 quarters here. And also they beat on the revenue side. It's very good here. I like the company because it's very predictable here. And as you look through here, analysts are upgrading this company right now. December 3rd, we got two upgrades. A price target raised from 85 to 95. Then again from 143 to, there's a little bit downgrade here from 143 to 103. But current price is around $80. It's a big upgrade from $80 to 95 or 103. So with that, let's look through here from an insider transaction perspective. Our CEO Dustin, he's buying shares big time. Look here, 16 million, 32 million. He's putting his money to work here, buying his own company share, understanding it's a great value here. And we got a director here. He's also this director is also buying, as you can see here. Not too much amount, but it's good. Director is also buying. So overall, when I see this type of buying here, that tells you something. There's a good conviction from Dustin here. He knows where he's taking the company. He's got vested interest here, skin in the game. I like it. And from a stock chart perspective, look, stock has been struggling in 2020, 2021. I mean, now it's going higher. That's a positive trend here. And look on the balance, DMI chart here, which is one of my favorite technical analysis. In the DMI chart, the blue line wants to go higher, red line wants to come down. Pretty soon you will see a bullish crossover where blue line wants to cross over red line, go higher. That will be a great bullish crossover here. Look on the balance, volume is going higher. That tells you smart money is flowing in. And check-in money flow, which indicates smart money flow, also indicates smart money is flowing in. That's a good sign here. And IV percentile is 57. So anybody out there selling some put options, you could sell some put option, make some good money, and go from there. I would not recommend buying call option given IV percentile is high. Instead, buy the stock outright and go from there, or sell some put options underneath the stock price, maybe 45-50 days out. So with that, from a stock option chain perspective here, we got Asana about $79 price here. all-time high is 145. There's a very good increase here. It can go higher nicely. And look, around $80 we got lot of option open interest here, 107. But look, at $100 we got 289 option open interest here. That tells you folks are even buying $100 strike call options here, and also 110 and so on and so forth. Look, even at 160 we got a lot of call options here. That tells you a lot of people are buying call options. In the options market, folks are bullish. On the other hand, we got some activity in the put option side, but nowhere close compared to call option here. And let's jump in here and look at the put call ratio here. As you look through, we got a lot of call option buying here, 1840, just 350 put options, so not many takers are put option. That's very bullish. And look, PC ratio, put call ratio is 0.919 here. That tells you a lot of people are buying call options, betting the stock will go higher. From a VWAP perspective, stock is about $81 and the VWAP is 80. That tells you that maybe a little bit pullback. That's why VWAP is below current stock price here. And from a ranking perspective, let's rank these favorite companies: Asana, Monday.com, Confluent, Atlassian or Team, Smartsheet, BL, Blackline, Bill.com, and AppLoving. So as you look through here, all these stocks have got nice strong buy rating or buy rating. And as you look through here, target price for all these stocks is higher than the current price. That tells you analysts are betting the stock will go higher. And all these stocks, many of these stocks are much below their 52-week high, pulled back nicely, probably with the exception of Smartsheet, which has gone up recently, just 9% down. And from a revenue perspective, all these companies have got great revenue. Look, Team.com or Atlassian has got $2.2 billion revenue, and AppLoving has got $2.5 billion revenue. That's a good revenue here. And from a revenue growth perspective, Asana has got great quarter-over-quarter revenue growth. This is past revenue growth, nice here. And even Team.com has got, Atlassian has got nice revenue growth, as well as Smartsheet and so on and so forth, as you can see here. And from a net margin perspective, company is not making it yet, but nice gross margin. Look here, 89% from us for Asana, Monday.com 87%, and Team is 84%. Nice, respectable software gross margin. And from a cash perspective, all these companies have got nice cash here. Look, Confluent has got $1 billion cash. Team has got about 1.6 billion, and Blackline and Bill all have got a lot of money here. No need to worry. From a debt perspective, some of these companies have got debt, but look, Asana has got not too much debt. That's why debt to equity ratio is just 1 here. And Monday.com is pretty strong, not too much debt at all, zero debt as you can see here. And Confluent also zero debt as you can see. That's a good sign here. I mean, there is some debt, but not too much. So with that, Bill.com has got Blackline.com has a higher debt here, but it's executing very nicely. And then you got valuation perspective here. Many of these stocks are not cheap. They're richly valued. Look, we got one of the highest valuation is Confluent here, 48. Actually, Bill.com is highest from a valuation perspective. Asana is somewhere, in the middle of the road here. That's why I like it. And Smartsheet has a low valuation, and Blackline has got a very low valuation, as well as AppLoving. So with that, all these companies are not making money. All earnings per share negative right now. And from a growth perspective, we also always have to look at future growth. This kind of tells you the future growth prospectus of these companies. Look from next year perspective, Asana has got positive earnings per share growth as well as positive sales growth. And many of these companies have got nice sales growth and EPS growth for next year, as you can see here. From a money flow index perspective, Asana is sold off here, very low, 32, as well as Blackline, which is sold off here. But AppLoving is a little high, probably good to wait a little bit for a pullback here. And even Smartsheet is a little bit high, good to wait for a little pullback here. From a return or a performance perspective, Asana has done very nicely for 1 year, 163%. And look, team or Atlassian is great here, 1446% in last 5 years, 53% this year alone. And then you got Smartsheet is struggling a little bit, as you can see here, 1 year just 7.4%. And also Blackline is struggling this year, but they've done nicely in last 5 years. And you got Bill.com, as you can see here, done nicely, 73%. App Living is relatively new company here. And from a health perspective here, as you can see here, you got scores here. As you look through, team has done great here, mostly green, and other companies like Blackline also done great. Now let's rank these companies and see who is at the top. From a rank perspective, number one goes to team or Atlassian. As you look through Atlassian here, they've done great here. They've done about 1,446 performance in last 5 years. That's an impressive number here. Most of these categories, they are green with the exception of profitability, which they're a F right now with the negative net margin here. And number two goes to Bill.com here. Bill.com has done great, as you can see here. Gets a C grade in financials, and Altman Z score is pretty nice here. And they got a A grade in growth. That's why it's number two here. And number three goes to Blackline. Look, Blackline is a great one here, with the exception of a little bit high, debt to equity ratio here, 3.3. They're doing great. B grade in the financials. Nice B grade in the growth here. That's why it's number three. Number four is Smartsheet. As you can see here, Smartsheet has done great. B grade from a financial perspective, and they got a D in growth and F in profitability. That's why number four. Number five goes to Asana, the stock that we are talking about. It's got a legendary leader. I think on this stock, we just can't go by the numbers because it's a legendary leader. He's got a 100% approval rating, even though from a number perspective, it gets a C grade in financials, D grade in growth. But conviction of the CEO is great here. I would, if you're a young investor or a young at heart, I would say buy some Asana, sock it away. And number six goes to Monday.com. Monday.com, as you go through here, gets a C grade here, and they don't have too much growth to show right now. But as you can see here, they don't have too much debt, zero debt here, and that's why I think it's a good software company. And number seven goes to Confluent, one of my favorite here. As you look through here, gets a C grade here in financials, and keep watching here. I think they're doing pretty nicely from a performance perspective. I think it's too early to call. There is no 1 year performance yet, but I think overall they got nice EPS growth and sales growth for next year. And number eight is App Loving here. App Loving is a little bit too early. It's just a newer company here. I like this company. Right now, as you can see here, it's done from a performance perspective. There is nothing to show in 1 year and 5 year young company, but nice expectation for next year, 403% EPS growth and 34% sales growth here. So that's the quick rating for you. Keep watching some of these companies. I would say, I'd say all these are great companies. Maybe top five, you could buy some during this pullback and go from there. So with that, what should I do with Asana? You might ask. So I say, we have a legendary co-founder at the helm here. He's the CEO. He was also co-founder of Facebook.com. That tells you CEO knows how to build a great company. 50 billion plus total addressable market. And we all spend too much time on the busy work. Company wants to cut down busy work and help you focus on your core work. And 2 million plus paid users, and they got nice annualized revenue run rate here, 401 million. That's a good annual number for this early startup. And 96% revenue growth in customers paying 55K and more. And number gets better. We got 145% here, dollar-based net retention rate. That's a good number here. And they're a leader in MarketScape in worldwide collaboration. I would say take advantage of this pullback here and buy some dips on Asana and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.